Hello, my name's Dominic with Cutler Real Estate, and I have the honor to introduce Micah Riley here. Micah is the president of Title I, and why I wanted to have him in here today is in the last 90 days, believe it or not, I've had 4 transactions where people want to do what's called a 1031 exchange. And the benefit of that is if you're a business person or you have a property and you want to find a like property, how do you get out of paying all the taxes? So I brought Mike in here to see if he can just give us some bullet points on Title I, and can you do this, and how much does it cost, and is it hard to do? So go ahead.
Sure.
Micah, what do you know about a 1031 exchange?
Yeah, I mean, it's pretty simple. The gist of it is if you have an investment property, whether it's a rental or any type of investment property,
like a ice cream stand.
Ice cream stand or a rental property or an apartment building. It can be 1 unit, it can be 1,000 units. Let's just say you want to take those proceeds out and sell the property now, but you don't necessarily need the proceeds. What you can do is currently you're going to pay between 15 and 20% taxes to the government on the gain of that property when you sell it. So to defer that gain, you can do what's called a 1031 exchange. It's a very simple process. The closing costs are about $800 to $1,500 in addition to your typical title fees in a transaction. And it takes roughly 3 to 4 weeks to close a transaction that's involved with a 1031.
I see. So basically, if I had a proceed of $200,000 at 20%, I would be paying $40,000 to the IRS.
Correct.
And so by eliminating that, by doing a 1031 exchange, the magic is you don't really touch the money. Although you could pull some money out and be taxed at the some money, but the majority of it would stay in that trust account, not able to touch it until you identify a property.
Correct.
So my understanding is you have 180 days from start to finish to identify a property. Is that how it works, or how does that work? Do you even know?
Great question. So when you sell your first investment property, you have to actually identify a new investment within 45 days of that closing.
Okay.
And then you have a total of 180 days to actually finish the closing process on that property. So in essence, what you're doing, Dominic, is you're just deferring those capital gains to a later date. Because for some tax reason, you might not want to claim that $200,000 gain this year. And of course, you don't want to pay the $40,000 right now.
Well, this is what I've been hearing. So this might be something you might want to consider as an alternative investment opportunity is if you want to sell something, let's say you're in Ohio, it's gray, it's cold, you're tired, you're getting closer to retirement. So you want to sell your investment opportunity and go to the Carolinas and buy something you can rent and then also retire to eventually. So that's kind of like what we're thinking. So I wanted to say thanks for tuning in today. This is just a snippet on what the situation is. Micah Riley can be reached at
330-338-5130, or you can go to our website, title1usa.com.
So if you have any questions about a 1031 exchange, feel free to reach out to Micah, and he'll guide you through the process. And we want to keep you as an informed decision maker so you and your loved ones will be happy. Thanks for tuning in.